Welcome back to the podcast. Today's guest is David B. Wang. David is the CEO and founder of Krip. Krip is a financial tech company based in Hong Kong, and they are the first personalized, comprehensive, and centralized credit card deals and offer platform. In the episode, we talk about a whole bunch of stuff to do with fintech, Krip, Hong Kong. We dive into all of the different aspects of David's life. And everybody, if you stay to the end, David really gives some amazing points at the end. So I hope you enjoy the podcast. David, welcome to the podcast. I've been looking forward to this conversation since we had that chat probably for nearly a month ago now. But for context, for people that are listening, I think you should give us a quick deep dive into who you are, where you come from, what you are currently doing. So let's start at the beginning of David's life. Where are you from? Talk to me a little bit about that.
Sure, and thank you for having me on the podcast. People always ask me that question, and I find it quite difficult to answer, actually, because my background is very diverse, and I don't really see myself belonging to a certain label, if you will. So I'll just walk you through it. I think that's probably the easiest way. I'm originally born in Canada, so I'm Canadian. My parents are originally from China, but I grew up for the most of my life in Hong Kong. But I did go to an international school in Hong Kong. So although I was exposed to local culture, I'm also very much a westernized, had a very westernized upbringing. And then I proceeded to study university in North America, ultimately graduating from the University of Michigan. So yeah, I think my upbringing is very diverse in that sense, but it's very interesting as well because it allowed me to see both the East and the West and really have a very personal experience in both. So post-college, I started my career in investment banking at Credit Suisse in Hong Kong, working in their financial institutions group. So effectively working with banking clients for the most part across Asia and some parts of Middle East as well. Did that for a while and then transitioned into the investment side, working in a family office called Blue Pool Capital, which is the family office of the new Alibaba Group chairman, Joe Tsai. So I was in their direct investments team, meaning we were doing both venture capital and private equity deals. So did that for a while. And then I'm sure we'll jump into it, but then that's when I came out and launched my own fintech startup called Krip. So as a very brief background, Krip is Hong Kong's first centralized credit card deals data platform. We've aggregated all the different types of deals offers from all the credit cards into a single database, and we provide access to that database through a single point of access, effectively through a single API, and then we integrate that with various different partners. So it's very much a B2B business centered around data and API. So even though we're only in Hong Kong right now, we have obviously very ambitious plans to take this beyond into the broader Asia region. So that's a very brief intro to myself and my startup.
Cool. And what was the investment banking world like? So we won't jump into Krip just yet, but what was that kind of world like, and what made you jump into that sector? Was that always planned from when you were younger? Was that something you were always interested? Are you a numbers guy? How did that sort of come about?
Yeah, the story behind going into investment banking was quite an interesting one. I actually had no idea what I wanted to do. I was curious about finance, and yes, I was the numbers guy. In fact, I was that nerdy guy who was very into financial modeling in college, and I did that instead of going to parties sometimes. So I'm not afraid to admit that. But I think for me, I went into banking for a very specific reason. I did a few internships in various sort of subsectors of finance. I've done corporate banking, I've done wealth management, I've done accounting. So I've tried a little bit and seen a little bit. And the most impactful thing, I think, was just the fact that I try to speak to as many people as I could in the industry and just learn from talking to them and what their world was like. And I picked investment banking ultimately because it spoke to my strengths and my ambition. To be very honest with you, I found most 9-to-5 jobs pretty boring. I like the challenge of investment banking. I love that every day was very different. And to be very honest, I was one of those people that just needed to be to be the best, and I want to challenge myself to get in. And obviously, if I didn't get in, and it's not 100% guarantee, if I don't get in, that would have been okay. I would have pursued something else. But lucky enough, I got the internship offer from Credit Suisse and then turned that into a full-time offer. But look, I think the general mystique around investment banking is probably a little bit exaggerated. Yes, people do work extremely long hours. I worked very, very long hours. It was not easy. But on the flip side, you also do get paid very, very well. I think, I'm not afraid to admit that.
Yeah.
But for me, I think what was very rewarding, and looking back, is just the amount of uh, hard work that they put you through, and it actually built a lot of character. I matured very, very quickly. I learned how to be efficient, the attention to detail, and I think that's one thing when I came out of banking and private equity. When you start working with other people, especially in the startup space, uh, it's quite clear that training is on a different level. I'm not discrediting other people and what they're doing, but it's that level of attention to detail and the work ethic and the grit that I think it really shapes a person.
Yeah.
But on the flip side, for me, and being very genuine about the hours that I worked, it took a toll on my health. It took a
Yeah.
toll on my social life. And so, there is no perfect answer to this. And I think it's very much to, each to their own. But for me, I thought that time that I did in Credit Suisse was sufficient for my own journey. And
Yeah.
then that led me to a next chapter of my life.
Yeah, I think investment banking sets up a lot of entrepreneurs and founders to take that next step into their first company. And I think it is probably a very good training ground in a lot of respects because of the grueling work hours which you have to endure in entrepreneurship, a lot of stress management which you have to endure in entrepreneurship. So I think it's actually a really, really good breeding ground or a training ground for entrepreneurs. And it's funny how you're saying you were the guy who maybe didn't party that much at college and you were more into like math equations and stuff. I'm sure you did a little bit of partying here, there, and everywhere. But I read a really funny quote that Hong Kong has the highest average intelligence quotient in the world. So like the average IQ, I think it's the average, but it's around 107 IQ, which is like the highest in the world. And so before the podcast, I was running through like strange quotes or strange things around Hong Kong, and that's just one of the things that came up. But
I lived here
I
a
didn't
long
know if
time.
you knew that.
No, I did not. I genuinely did not. I didn't even know people kept track of that, actually.
Well, apparently they do, and somebody can fact check that, but maybe the ChatGPT or the large language model I'm using could be wrong. So you never know. But so okay, so investment banking, and then where did the career sort of start? So you said I had a little bit of health problems, obviously with the heavy workload, and I know people in the investment banking world as well who have also struggled with that kind of stuff.
Yeah.
What kind of happened in that period of your life then? So was it stress, overwork, bad life habits? What sort of happened, if you don't mind going into that?
Yeah, of course. I think it's a combination of many things. I guess maybe to give you some context, the way that my team was structured was, I think that there was some shortcomings on the team's overall planning in terms of their hiring schedule. So originally, I went in with another analyst. I mean, so I think the difference between Hong Kong office to US and UK is that it's just larger teams in US and certainly in UK. But in Asia, the teams are much leaner. And so the team sizes are smaller. So for me to join our team at the time, we have 4 senior analysts, 2 for China, 2 for non-China. And then so to replenish the young analyst pool, they hired 2 people, myself being one of them. But unfortunately, the other girl who joined me was not able to really pass the first 2 months. So she actually left 2 months into the job. So that left me as the only analyst on the team when the other 4 guys basically got promoted associates. So effectively, we had 1 analyst supporting the entire team. So for the large part of my first year, it was very, very, very brutal. And so I didn't really have time to exercise. I barely really slept, to be quite honest with you, and it was just a ton of stress. And I was constantly being pushed to be more efficient, which honestly at the time it was madness in my head, right? But looking back, it did push me to be even more effective and more efficient with what what I was doing. Um, but I think over time, the lack of sleep, the lack of exercise, just sitting in the office, 20 hours a day, it eventually takes a toll. And so I just started getting sick with quite regular frequency,
Hmm.
almost once every month, if not two. And I had a very bad tonsillitis breakout as well. So it was very clear it was taking a toll. And I think at that point, the team finally said, yeah, why don't you go take 2 weeks off to
Yeah,
recover?
absolutely. Because stress has such a damaging, like chronic stress over a long period of time has such a bad effect on people's health that you're inevitably going to get sick. Um, that is no surprise. Even workaholics that love work, if they push themselves to that extent, and even if you love what you do, I still feel if you push yourself to that kind of capacity, you are going to get sick eventually. Even if you love what you do, the body or the brain just can't handle all of that.
Yeah, and actually, if we just fast forward and just jump forward very briefly, I think obviously hours wise, my startup, running a startup, it can get grueling, but of course you're the owner and you can dictate your schedule. But the stress is more constant. The way I put it is banking stress is very, very intense. But for what it's worth, you could technically leave the stress at the door. I know people say, you're still on your phones and stuff, but technically, when you go to bed, you shouldn't have to think about it. But as a startup founder, you take that stress to sleep. And that takes a toll. And what I've recognized over the last few years that I've been doing this is that, yes, you can burn out. And it's okay to accept that. And sometimes you just need to go away and recharge, even if it's a day or two, maybe a week, and you come back, you feel more energized, you feel more passionate. And it's got nothing to do with whether you believe in the project or not. It's just the fact that the stress takes a toll on your body, on your mind. And so it's good to get recharged, bring back some positivity and energy. And then once you have that, when you go pitch, when you talk to your team, when you just talk about your startup, you'll feel more energetic and people will resonate.
Yeah, I totally agree. I feel like burnout, depression, there's lots of debate on why it is so more pronounced or more common these days than it has been than ever before. The old timers will say, "Oh, the kids aren't built how we were built back in the day," and the kids are saying, "No, no, no, we're overworked and underpaid," and the old people are like, "Oh, yeah, but so were we back in the day." And there's lots of different nuances that you could pull apart there. Um, but in your opinion, is there like how do you get to that threshold? Like how do you push yourself to that point and know when to take a break? What is it for you? Because I feel like there's a lot of entrepreneurs out there that will just keep pushing and pushing and pushing till they get to the point of like breakdown. What is the point that you can then what is the point that you then know for you that you've pushed it too far?
I think, and honestly, this is experienced by trial. I think it's when you feel like you're just going through the motions, right? There's so many things that a startup founder has to deal with that inevitably there are things that become a bit mindless. And so if you feel like you're just going through the motions, or if the next pitch you're giving, you're just going through the slides as you have done many times before, take a break, because the whole thing is about you. And if you don't have the energy, you don't have if you're not interested and passionate about your own idea, nobody else will be, right? So I think that's the most important. If you feel like you are just going through motions, take a break, recharge.
Yeah, I totally agree. I've had like I don't want to say that I'm burnt out because I really try not to label myself with different terminologies. I think labeling can have a very it can be very negative and very positive at the same time. So I try not to label myself with negative things. But for me personally, setting up this whole podcast over the last month and a half, I've been working double time, and I luckily now have a holiday in 4 days, and I can't wait for 2 weeks off just so I can, just reset the batteries, not think about my full-time job, not think about the podcast and the business that I'm setting up with that. I cannot wait for that just 2 weeks and then to come back and feel as fresh as possible. So I can definitely relate to that right now. But moving then into where you're currently at. So tell, like, I know a little bit about Krip, but I'm not going to try and explain it because I'll probably butcher it. So if you were trying to explain to somebody in as simple terms as possible what your company does, how would you then describe that to them?
Sure. But I want to caveat that the pain point that we're tackling is one that's a little bit more native to Asia and less so in UK or North America or Europe for that matter, because credit cards and the payment landscape in Asia is much more competitive and it's centered more around deals as incentives to drive spending. I know in other regions there's more focus placed on points, certainly in Europe, because credit cards interchange fee is actually capped. Cards can't actually offer that much value through deals. So in Asia, that's the backdrop, right? There's a lot of competition, and people in Asia love deals, which means if you take a card, you take any payment provider, and you go to a restaurant and you eat, you can get 30% off, for example, right? So by virtue of that, there's a lot of deals out there. But what we found, interestingly enough, is that nobody actually knows about those deals. Everybody has multiple cards in their wallet. They all know there's a lot of content that they can leverage through those cards, but nobody actually knows exactly what that content is. And so that's the pain point that we're addressing. And we solve that by centralizing all the deals from all the cards into a single database and allow people to actually discover deals based on their cards. So a personalized experience on our consumer facing solution. So we do have an app and a website. But more importantly, we actually provide access to this database to business partners so that other platforms can leverage these deals to drive their business. So a very good example of that is, imagine if you are on a restaurant reservation platform, right? I'm sure every part of the world there is a few major players in that market. I think Europe there's the Fork, there's Yelp, and other places. In Asia there's Chope and OpenRice. So imagine if you go on those platforms and you're able to find relevant or even your personalized credit card deals as you're picking your restaurant, then you can really find value when you're out and about and looking to eat, right? So that's the value that we're bringing, getting people closer to the deals and really enabling them to maximize their everyday spending. And that brings benefits to both the consumers, the businesses, the merchants themselves who are offering these deals, as well as obviously the payment providers, because they ultimately benefit from you spending money.
Yeah. And because I feel that credit cards aren't really, well, nothing about credit cards are really taught to people, especially not the point systems. Like, I didn't know anything about credit card point systems till around 3 years ago. And now I'm only just, starting to understand it and dabble with it a little bit here and there. Why aren't these things more widely taught, in your opinion, or why aren't they, especially in the Asian market? So why don't more people know about this kind of stuff?
So I can't comment in terms of the other regions. I'm not as well versed. But in Asia, to be very honest, it's an infrastructure problem. If you think about what credit card is as a product, it's really an 80s innovation, right? This is not anything new. And so all the infrastructure surrounding credit card payments is from the 80s and 90s. And so there's a lot of legacy technology in there. And so when you speak, certainly in Hong Kong, you speak with the banks and you understand how their credit card team operates. The pain point is the infrastructure. It's got nothing to do with strategy. It's got nothing to do with whether they want to do it or not. Of course they want to do it. These deals are not cheap to source, right? Imagine if you're a bank and you got 1,000 deals with a bunch of restaurants, you have to go and source these deals. Or if you don't, you have to outsource it to a third party to do it for you, which also costs money. So this content is very valuable. But the reason it's not getting out there is because they don't have the infrastructure to do it. In Hong Kong, certainly nobody actually has an API for this kind of content, right? Which is shocking in many ways. And so we recognize that, and we are looking to provide that layer of innovation so that we can hopefully take the credit card market to the modern age, if you will, and solve for that. So yeah, I think ultimately it's more of an infrastructure issue.
And what's been the biggest problem you've faced so far with, is it the infrastructure, or is there other barriers that you found sort of bringing this to your region? What's like the biggest barrier you faced?
There's a few, but I think the biggest barrier ultimately is that uh, it comes back to the infrastructure point,
Okay.
right? I mean, for a bank, it's very, very difficult to just say, let's revamp your infrastructure. And it's not just in Asia. I think that's global. And so you have to find ways to work with them. The poor way of putting it is you have to give them a band-aid fix first, right? Give them something that they can just use off the shelf, that's quick to deploy, ticks all the boxes, good business case. And I think that gets the ball rolling. Because I think for banks, and having worked with banks from banking days until now, I think their whole business is it's lending business, right? It's an interest spread
Yeah.
business. So unless you're touching the core product, everything else is not their main priority. I'm not saying it is not their priority, but it's not their core priority, right? And in Hong Kong, certainly the banks make so much money from loans, especially around property. And I think that's very interesting, actually, just as a side point. To those in the audience who may not be from Hong Kong or are not familiar with Hong Kong, even though Hong Kong is a tiny city, its banking system is huge. Just how huge? I'll give you an example. So when I was in Credit Suisse, I worked on a bank merger in Abu Dhabi. This was between, at the time, National Bank of Abu Dhabi and First Gulf Bank. These were the two largest banks in the political capital of the United Arab Emirates. The combined balance sheet of those two banks is still smaller than the second largest bank in Hong Kong. And the reason for that is Hong Kong just has a ton of property loans. And so these banks don't necessarily feel the urge to innovate. And I think that is quite a common theme across many different banks across the world, where if you are not forced to change, they're not going to change. And so the most innovation you see really comes from regulation. When the regulators push them to innovate, they have to, because regulators are ultimately their bosses, right? So if the regulator is not pushing it, you really have to dig deep to find a way for them to adopt new technologies or to innovate. And I think that's one of the biggest challenges that we see.
Interesting. And so talk to us how you then first broke into, like, not broke into the first bank. That sounds a bit strange, like bank. How did you first approach these banks? Because obviously you're from the industry, so you must have had maybe a few connections here, there, and everywhere. How did that look like striking your first deal as an entrepreneur? How did you go about that? Tell us. There must be a small story behind that.
To be quite honest with you, it's actually fairly straightforward. So of course I had some networks, but when we first tried to approach the banks, obviously my network are people around sort of my age or generation. So they're at that point sort of in the mid low to mid level of the banking hierarchy, if you will. So yes, they're helpful, then give you some insights, but they're not really the key decision makers. So what ends up happening is if you start talking to the sort of junior level, mid level, they just kind of take you on a loop, right? They'll like, oh, we'll revert, we'll think about it, we'll check internally, and then you just get put on this waiting game. What really broke that cycle for us is when we brought on board our chairman, Benjamin Queenland, who was the former chairman of the Hong Kong FinTech Association. And he also runs his own financial consultancy shop called Queenland and Associates. I'm sure you guys can find his profile and LinkedIn and stuff like that. He's very, very well known in the fintech space, and he publishes white papers constantly around the fintech landscape, both in Hong Kong and around the region. And so it was really through him and his network at the senior level was when we really broke through. And I think that's the I guess the part that we don't really talk about in the startup space is that networking or knowing the right people means more than anything else. Getting to the top will change the dynamic of a BD sales cycle so much. Of course, it's easier said than done, but I do think sometimes it's less about building the good product or the perfect product, but knowing the right people who can help you get it out the door. You can refine it later, but make sure you know the right people first.
Yeah, I could not agree more with that. I've noticed the more I've done like B2B sales, getting one key decision maker on board or just somebody with a lot of influence can speed up the sales cycle by 10 to 20%, like 10 to 20x easily. And also as you're going through and getting older, your network gets bigger and bigger and bigger, which also, yeah, can only help business wise.
100%.
And so, talk to me a little bit more about the team then, because behind every entrepreneur, there's always a team of people, maybe a small team, sometimes a big team. But who are the people behind your company that maybe people don't see or hear about, that probably don't get the credit that they might deserve? So, who are the key people within your organization that have helped you get to this point now?
I mean, obviously, the chairman that I mentioned, Ben Quinlan, has been absolutely instrumental, not just through his network, but obviously guiding me through as well. And I'm very thankful to him for not only his help, but really his mentorship on a personal basis as well. I mean, he works with startups quite often. He regularly invests and work with startups, so he's seen entrepreneur journeys, and he guides me through that. A lot of the times, he wants to make sure that I don't make the same mistakes that maybe other people have, and that's really incredible. And I think for me, the ironic thing is, when I was in the family office, I looked at a lot of startups. I've met a lot of founders, but I never really had someone who I would say, this guy is, or this girl is my mentor, who's done what I'm trying to do, or walk that path, who can maybe point me in the right direction. So I've kind of been trying to forge my own path, um, and obviously made many mistakes along the way. But our chairman Ben, he really took me under, I would say, and then really become that mentor figure for me. And I think that's also something that I think is incredibly important to anybody who's trying to be in this role. That it's always good to have somebody who can guide you through along the way. The second person who really doesn't get talked about at all, and I wish that we did more, it is the guy who effectively is responsible for all our tech. Is a good friend of mine called Draco. He's a brilliant developer, and it's not really the fact that he's technically capable. He's one of the few developers who actually understands business and product as well. And so when we have a discussion, it's not about technically, can we do this, can we do that, but it's about, does this actually make sense? Right? Is this the right thing to do at this point in time? And because of his background, he's also worked with startups before. He himself worked in Lalamu from an early stage, and saw them through until they are now a unicorn startup. He's seen that journey. So I guess, related to my first point, he also sort of mentored me through a little bit from the product side, to say, hey, look, don't build the perfect product. There's no point in doing this. Let's just get this out, and many other examples along the way. So I owe the little success that we have so far to both of them, and I think they really define both the startup and myself, actually.
Yeah, having someone that's been there, done it, brought the t-shirt, so to say, is super important. Saves you from making so many mistakes along the way, and I think that's what a lot of investors look for as well, within companies, is that if there is a young founder, sometimes if they hire a more experienced CEO, or at least have a mentor, like Ben is for you, um, it makes you way more investable as a company. It cannot be understated enough that is so important. But let's move a bit more onto the product side then. So I have this question that just keeps coming into my head, that why aren't there more competitors in this space? Because to be honest, I didn't do the research on if there are that many competitors, but I'm just presuming that there aren't that many from the first conversation we had. But please just expand on that a little bit more if I'm wrong.
Sure. The real honest answer is, there actually isn't any who does it the same way that we're doing it. I think it'll take a fool to say there are no competitors in anything that you do. But I guess we carve out a niche that is a little bit more different, and I'll explain perhaps why. So I think the most challenging thing about what we do is actually the database infrastructure. It all sounds simple, right? Aggregating deals. There's a lot of aggregators out there. There's a lot of comparison sites out there. But the data that we're aggregating is so unstructured, because if you go on every single bank's website, they have so many different formats in how they display deals, the kind of information as it pertains to all these deals. And so standardizing that data is incredibly difficult, and building that relationship, because unlike a lot of the unstructured data, credit card deals data is actually incredibly relational in nature, because every deal has a credit card, and every credit card has an issuer, has a card association or card scheme, and a merchant tied to each deal, right? And then each merchant has then corresponding labels you can put on it. What, like for example, a restaurant, it's in a mall somewhere. So a lot of that data, it's all very relational. It's very very sophisticated in how you map out this relationship. And so it's not an easy thing to do. In fact, when we talk to some of our partners, for example, a restaurant reservation platform, their CEO actually openly admitted he tried to do this 15 years ago. He just couldn't figure it out with the technology back then. I met another founder of a comparison site who said he also wanted to do the same thing, couldn't solve it, 10 years ago. And so some part of it is the technology, but mainly I think it's the devotion to this one thing. Like, we want to focus on this one thing and do it well. And that's what we really spent a lot of our time on initially, which was just building out this database infrastructure to make sure it's scalable, it does the job right. And I think that's the biggest achievement that we've done with the product, because now with that infrastructure, we can scale to other markets in as quickly as a month's time, if not even less. And so that's really the most difficult thing, and that makes us very very unique. And then separately to that, I think I think this is more reflective, I think, of Hong Kong's startup scene. Hong Kong B2B sales cycle is extremely long. I think in general around the world, B2B sales cycle is long to begin with, but Hong Kong is even longer. I mean, you'd be shocked to get anything done in less than 6 months. It's typically a 9 to 12 month process, if not longer. And so I think by virtue of that, in Hong Kong, you don't see many successful B2B businesses. And I'm not talking about SME businesses, right? If you work with restaurants, that's just a matter of volume, right? You send 50 sales rep out, I'm sure you'll get some. But I'm talking about big, large corporate B2B service providers. There's not that many. And that's precisely why, because you have to play the long game. And the problem with playing a long game as a startup, it's cash burn, right? And so it's very difficult to make that equation work. And I think that's fundamentally why, at least in Hong Kong, certainly in other cities in Asia, nobody's really, I guess, bothered to do this, because maybe that process just seemed too daunting or intimidating. So the beauty of what we've done is that we figured out that we can do it, and we can do it at a very cheap cost. Our cash burn is extremely, extremely low. And with the networks, with the connections that we have, we think we can hopefully expedite some of that sales cycle, and so that effectively make that equation work in our favor. So I think that's largely playing out how we predicted, and we hope that it will become successful. But I think that's maybe a one way to look at why nobody else has really tried to do this. It's not, and I think a lot of people ask this, right? What's your moat? Right? What's your competitive advantage? And I always say there's usually always two things that create a strong moat. One is technology, and the second is commercial, because you can't just rely on technology. I mean, ChatGPT, when it first came out, people thought it was phenomenal. Within 2 months, everybody seems to have a carbon copy of ChatGPT, right? So technology as a moat doesn't stand by itself. You need to have a strong commercial moat as well. And so we've tried to combine both of them. And I think that's what makes this quite special.
And what are you doing on the commercial front that's probably making you stand out or making you a little bit different then?
So going back to what we're doing with this API, we're integrating and plugging that into the major retail platforms around the market. So that's shopping malls, restaurant reservation platforms, personal finance solutions, comparison sites. We're also in discussion with other what we call retail directories. So let's just call them map applications, for example. Aggregators, any retail touchpoints that can leverage deals to enrich their content and to better engage their customers. So if you sort of fast forward and imagine that scenario plays out, our API would then be plugged into all the major consumer applications in Hong Kong and the city. And that creates a very powerful network effect. And that's, in essence, the commercial mode. When even if somebody duplicates our product, and let's say they leapfrogs our technology, create something even fancier, even more robust, you can't break through the commercial because these apps will only integrate with one API, and we are the first one to do it. We've connected everybody. It's going to be very, very hard to break through that, right? So that's why I say it takes both. You can't just rely on tech mode because the world we live in now moves so fast. Somebody can always put a few more arms and legs on it, and somebody can create something better. You have to also have a very robust commercial mode.
Yeah, I couldn't agree more. It's like tech definitely isn't enough, especially when people can basically copy your idea in different parts of the world and drag you through a lawsuit that you can't afford, for example. And it's many startups have been put out of business because of stuff like that. But how was it right at the start? Because I remember on a call you said that you started the company basically during COVID. So, or was it was just before COVID had started that you kind of quit your jobs? Talk me through that small period and how that was, because that can't have been an easy road.
Yeah, so we actually started about 7 months before COVID started. So I'm thinking COVID was basically January 2020, right? The new year was kind of when it started happening. What we had an even worse stroke of luck is that, for those who may not be following Hong Kong's news in general, in the summer of 2019, that was when Hong Kong had a massive political unrest, and there was a lot of protests going on, and at some points it became actually quite severe. I mean, there was petrol bombs being thrown. It turned the city into quite a dangerous place, and so by virtue of that, tourists stopped coming, businesses went down, and so I think the biggest challenge when you're starting a startup or building out a business in these testing times, during either Hong Kong's protest period or during COVID, is that that's when businesses go into status quo mode, right? They're not looking to take any risk. I mean, survival is key. And I mean, of course, during COVID, so many businesses were just trying to survive, let alone, innovate or grow. So that was the biggest challenge. And I think the timing wise, it's actually somewhat beneficial to us because that was our R&D phase, right? We weren't ready to roll anything out. We weren't going to do any BD. So we just spent most of the time building out the infrastructure that I mentioned. And so once we were ready, then we were hoping that the market would be opened up. It did for the rest of the world, and I think Hong Kong sort of lagged for quite some time, and then that was actually our biggest struggle, trying to get the product out in midst of all this unpredictable COVID waves in Hong Kong. But I think we were somewhat helped or supported by the fact that we were able to get into one of the largest government-backed startup incubation programs run by Cyberport. So that was a 2-year program with financial subsidies and some other support. So that really helped bridge us. And I think coming out of that, I think it's very character building in a sense as well. I think, having gone through that, knowing that what you could not get worse than that. You literally cannot get worse than that. So, so it's very character building for a start.
Yeah, I was going to say, so yeah, going through the investment bank route was also difficult. Then going through the beginning phases of COVID, also very difficult. So you've kind of been through a very good training ground to put up with, I don't know, bad or uneasy times. So I think that's going to steer you pretty well in the future, because there's always going to be rough moments in entrepreneurship along the way. It's never a smooth sailing, especially as the company grows. And what does it look like moving forward? Are you looking to gain investment? Are you looking to grow exponentially, or are you taking it more of a slow and steady route?
No, so we are currently in a fundraising mode. We are looking to get our first external funding. We haven't actually raised at all. We've just been bootstrapping because, as I said, the cost burn to us is very, very low. And on top of that, we are looking at expanding outside of Hong Kong quite aggressively. We haven't started, but we are making the plans to do that very, very soon. And we do think with some of the commercial pipelines that we're going to realize in the next 6 to 12 months, hopefully, that will actually become a profitable business as well. And I think that's very, very important to us. So in a way, I guess we're not one of those startups that we need to raise money to just keep going. But we want to raise for a very specific reason, and so that's why we're going out to raise. So I think there's a lot of grand plans. We've been picking up some good momentum. We actually picked up a few awards recently that I unfortunately cannot share more yet at this moment.
Mhm.
But I think there's a lot of good traction coming out of the last 6 to 12 months, and yeah, we're looking forward to more to come in the next year.
And where do you see the most important areas of your business to invest in then? Is it like sales, marketing, or tell me what you can about that, and where you see the
Sure.
most important areas for you guys to maneuver into?
Yeah, I think the biggest area that we're looking to invest into is data infrastructure, for our data analytics. Because on top of all the things that we do, the most attractive element, that we've gathered from speaking with our customers and our partners is the customer analytics data. So when our API gets plugged into our own application and our partner's application, every time the API gets called, we're actually able to track a ton of data on that individual user's behavior. For example, the cards that they have on profile, the kind of deals they're looking at, the kind of merchants they're looking at, what kind of district they're looking at. So all of these metadata, um, of course, non-identifying in on an individual level, but we're able to see on an aggregated level, what kind of deals attract Hong Kong cardholders? What kind of merchants are they looking at? And so it actually paints a very interesting picture on consumer trends. And we already see that actually through our own application in the last 12 months. For example, when Hong Kong opened up its borders finally for travel, it was an immense 3 months of a lot of travel content that people were looking for. And then over Christmas, I think some travel died down, so people were looking for some dining. So we capture a lot of that data, and the banks, the retail platforms, they want access to that data, and we want to realize that. And then again, this is part and parcel with that startup strategy, which is we never really plan to do this because it's expensive to build out this data analytics infrastructure. Um, but everybody we talk to, that's their first question: can we get the data? Well,
Yeah,
if you want it, we'll build it, and then once we build it, we'll sell it to you. Right?
yeah,
So that's how we're thinking about it.
yeah. Data is is the gold currency at the moment that everybody wants. So you'd be, if people are asking for it, you kind of be a fool not to give it to them. And what is that?
Exactly.
So I'm not really that well versed in like building that kind of infrastructure or even in the background. Why is it so expensive to build that?
It's mainly a manpower issue. We don't have a data engineer or data scientist by trade on our team. So we have to go recruit one effectively, and they're not cheap. So I mean that's inevitably the main reason. And the second thing is also the fact that we're anticipating to track so much data. I mean, data storage itself isn't the problem, but it's how you parse that data and how you make that sort of into actionable insights. How can we turn raw data into something that people can then go in and sort of play around with, feel for it, and turn them into actionable data for them for their own internal strategies. um, that I think is the biggest thing. And I think going back to what I said at the start, we're not burning a lot of cash. So bringing on a very senior data person is a lot for us.
Yeah,
It might not be for some other startups. So for us, it's a big investment, and so that's where we're looking to use the funding for.
yeah. So I'm going to take it back a little bit because the beginning of the journey for me is always the most interesting part. Like I do like to dive into a little bit of the nitty gritty stuff as well. But like, what's it been like as like a solo founder? Because there's no other co-founders within the company as far as I could see. So what has that been like? Because you see a lot of a lot of startups have like three co-founders normally. There's normally the operations guy, there's normally the tech guy, and then there's normally the like commercial guy. How has that been trying to fill like all three of those roles on your own? What's that kind of been like?
Yeah, just I think to be fully transparent and just to give some more context,
Yeah.
I did start this startup with another friend of mine. So there essentially was a co-founder at the very start.
Okay.
But owing to the COVID stress and everything else, and partially to do with his own family situation, he just decided to step away in midst of all that, which I obviously understand and I support. And so it was an amicable end, if you will, and it all worked out smoothly. I mean, we're still friends. There's nothing nothing lingering from that situation. But that was a tough moment. That was a very tough moment because we've been doing it, as sort of a two-man team, and just knowing that the next day I'm gonna have to take over all his stuff. It really took me back actually to that day in Credit Suisse when I told you they're just like you can do more, and I'm already flat out. But I think at that point it's a realization that it's always easy to give up. It's always easy to say stop. Uh, but to me, there's always more solutions than problems, and if you put your mind to it, you will sort it out. So I just kind of grinded it out and figured out a way. Now, I think to answer your question, and I guess how I'm running it now as a solo founder, it's not easy and it's not ideal, to be honest, but there are some benefits to that. So the first thing is you are the unilateral decision maker, and so that makes things very, very efficient. You don't have to discuss as a team. So you can just make the call. But of course, you have to bear all the responsibility and consequences of that call. So you just got to man up and own up to whatever decision you make.
I love that.
And then the second thing is you do have to pick and choose. You only have so many hours in the day, so you have to be efficient with the decisions that you make and how you allocate resources. And it's never perfect. But that's I think a very big challenge in my day to day is it's how do I allocate my resource between the various different elements. And I think the third thing is be smart. There are so many tools and resources out there. If you really just need an extra pair of hands for the cheap for some tedious jobs, go on Fiverr, go on I forget there's another site for freelancers, right? Just go on there and
Upworks.
find some help. Correct, exactly. Upwork, Fiverr, get yourself some help, very quickly. That will definitely help clear out some tedious tasks. Um, but ultimately, I think it's about being efficient with your resource allocation. And I think whether you are a three-man team, a one-person team, resource allocation will forever be a challenge in a startup. And so you have to come to grips with the fact that you're never going to have the ability to do everything you want, and you have to prioritize. And that's that's the nasty truth about a startup, and
Yeah.
you just have to push through.
Yeah. I think a lot of people need to start flexing their no muscle instead of flexing their yes muscle. I think
Mm.
there's so many distractions and there's so many things you can do or could do. It gets very overwhelming, especially when you're running on your own. I've had 3 different business partners in my life, and now I'm finally kind of doing it solo. And you're right, it
Mm.
does bring a different type of pressure, but it also brings a different type of freedom completely. There's no checking with people. There's no being able to pass the buck. If it goes wrong, it's kind of all on you. And you're right, you kind of just have to man up and take the consequences and hope you're steering this thing in the right direction. And sometimes you're thinking, "Oh God, is this really the right decision?" But as I said, you've just got to do what you can and hope that you're making the best educated decision. But I do want
Exactly.
to touch on one thing. So, if there was somebody starting off right now, like somebody early days into their fintech startup, let's say, what is one mistake or one pitfall you think that a lot of early fintech founders might fall into? And what is that one pitfall they should avoid?
Oh, it's a very simple one, and this is a combination of my own experience as a founder, but also as an investor when I looked at many types of startups around the world. I mean, my mandate and family office was global, so we looked at startups all around the world. It's just stop trying to build the perfect product. You don't need to. Um, And actually, if I may, it's actually 2 points, and it's related to the first one as well. Stop assuming that you think you know what the product is, right? Build the most bare bone prototype, MVP, whatever you want to call it. Get it out to market, and then ask the users or the customers what do they want, and listen to them. Because far too often, I come across startups that have phenomenal products, right? If you look at the product, it's amazing. They have the best technology. The UX UI is phenomenal. Everything works fine, but nobody uses it. Nobody needs it, right? There's no pain point that they're actually trying to solve for. They have a fancy technology, but they don't really have a solution. And so I would encourage any founders to look at their product and ask a very genuine question. What is the pain point that you're trying to solve for? And is this pain point actually real? Um, and the best way to do that is just go talk to people. Ask your customers, ask your clients, is this what they want? I'll give you a very good example. When I first started Krip, I didn't think that we should open up the database. I thought it should be a private sort of, you have to log in, you have to register a profile, then you get access to this database. And when we launched it, nobody used it. And it was a very simple question. Why should I have to sign up for this? And so you listen to them and you realize, oh yeah, okay, well maybe that doesn't make sense. And the moment we picked it up, we opened it up, the user count just started growing. And so I guess the point in that very small example is, as a founder, you don't know what's the perfect product. Your customers do. So ask them.
Well, that's you nailed that. Just so you know, that is, yeah, that is some seriously good advice. So, all right. Well, I have a few more questions that I wanted to sort of dive into. So, in terms of the payment landscape in Asia, we touched on it a little bit at the start. So,
Mm.
how is that different to North America and Europe? So, like, what are the big differences between the payment landscapes from, like, yeah, Asia, North America, and Europe? So, how do they differ?
Yeah, sure. I think the first thing that I think people um, think about when they think about Asia or China or India is the prevalence of mobile payments, right? E-wallets, and the lack of prevalence actually of credit cards. And I think that's just the evolution of the financial landscape, right? Given the maturation process of North America, Europe, it went through that phase when you went from cash to cash in the bank, and the bank gives you a card, and then now there's e-wallets and stuff. But in Asia, or certainly most parts of the growing developing countries across Asia, they literally just went from cash under the pillow to a smartphone. So they
Mm.
just leapfrogged the entire banking institution. And so therefore, banks and credit cards find it very challenging to penetrate that market after the fact. So that's something that is very, very common. So in Asia, you see a lot more mobile payments, mobile banking, e-wallets fighting against cash, actually. It's not a fight against credit
Just
cards.
now, sorry, because that's been like a big thing over the last 5 years in Europe. Definitely, is that just starting now in Hong Kong? Are you saying?
No, so the only outliers in Asia are Hong Kong, Singapore, and Japan, and Korea. So these are effectively countries or places that have developed earlier, right? But if we're talking about the developing areas like China, India, Southeast Asia, outside of Singapore, they went through the maturation process much later. So in the recent years, sort of more like recent decade, they really jumped from cash to e-wallets. But in certain places, like I was in Vietnam for a conference a few months ago, it's still a very cash centric uh, economy, and that's just by virtue of their progress in the financial sort of maturation. So I think so that brings very interesting dynamics. And I think the second thing is it's so much more competitive out here. I think versus the other parts of the world. Again, I think it's about the maturity, right? And certainly in North America, there's so much M&A activity around banking sectors in the last 50 odd years that now you end up with just a handful of incredibly large banks, right? And I think similarly in UK and in other parts of Europe as well. But in Asia, let's just take Hong Kong for example. There's 7 million people, and there are 26 card issuing banks with 480 different types of cards. It is incredibly overbanked, and there's so many options. And it really is the same as well in China, for example. I mean, there are obviously Alipay and WeChat Pay that dominate the mobile payments or just broadly the payments landscape. But if you look at just in terms of how many banks are available, it's literally like 50 plus. And so what's interesting then is it creates a very, very intensive competitive landscape for the payments payments market. And so everybody's trying to vie for customers' attention. And so what ends up happening is you have the banks fighting within that banking sector for credit cards. And you have the e-wallets doing the same thing because there's multiple e-wallets all trying to fight for the same thing. But all of them are fighting with between each other because payments is a zero-sum game. So it creates very interesting dynamics, and I guess that gives us an opportunity to bring some value.
And how is crypto playing a part in all of this? So how are you seeing the crypto market? Are you into crypto that much by any chance?
I'm not a crypto bro, as they call it, but I'm but I'm aware of it, and we're actually speaking with a NFT platform potentially at a partnership as well. So we're not gonna say we're not into crypto at all. But I guess to answer your question, I think there is definitely interest still, but I think it's very much segmented into a smaller population. I think, of course, during COVID, there was that global phase; everybody was into it, and certainly Asia was not, left behind in that. But I think if you look at the institutional adoption, it's picking up, but it's still taking some time. And I think it goes back to the regulators. Now, Hong Kong is trying to take one step forward. They're starting to issue some licenses that allow exchanges to support retail trading. But for example, in China, it's actually banned, right? So that kind of stuff sort of slows down progress. So I think it's more on the institutional levels adoption that will really lead the adoption on the mass market side. Um, but I do think that the market does need to go through that cleansing phase. Of course, we all know what happened to FTX, but actually, just recently in Hong Kong, and this is quite literally breaking news just in the last week. One of the largest crypto platforms has been accused of literally just running a scam, and it's taken more than $1 billion down the drain. And it's a company in Hong Kong, and then it's led to some arrests, and so I think that distrust is going to take some time to recover, and so for consumers, mass market consumers, it's going to take a longer time. But I think for institutions, there could be an angle there, and so they need to lead the charge.
Yeah, I think the whole crypto scene, in my opinion, has been tarnished to a certain degree with all of the different pump and dumps and all of the different scams, even with the NFT stuff. I think the reputation of it has just been battered over the last 6 months to a year. I really, they call them shit coins. There was so many of those things, like so many of those coins. I'm so glad I wasn't really like that financially well off in that period, because I would have been the type of person to 100% buy into that at the time. I'd have been all over it. I'd have think, oh yeah, get rich quick. That's what I'd have been all over that. But what do you personally think of, let's say, Bitcoin or Ethereum as an investment strategy? What was your opinion on that?
As an investment strategy, well, I think it's definitely a high risk investment, right? And I know people who've done incredibly well during that get rich period, but I also know a lot of people who lost a lot. So it's the volatility that I think scares people away. If you have the risk appetite, you know, sure, go for it, right? And I think that applies to all investments. I mean, before you invest in stocks, you should think about what kind of stocks you want to go into, right? High beta, low beta. So it really depends on your own risk appetite. Now, I think in terms of adoption, I think it goes back to what we're saying. I think it's the trust, is the goodwill that has taken a hit, of course, due to FTX and then all the other things that go with it. But I do think the biggest hurdle right now is the use case. And I think that's ultimately the biggest problem, right? I mean, we were talking about Ethereum becoming an actual alternative to fiat currency, during that phase. Um, but just the time that it takes to actually validate a transaction, it doesn't make it work, right? Compared to, let's say, just an Apple Pay.
Yeah.
Now, of course, they've upgraded infrastructure and all that, but it's really the use case that I think is the most important. It applies to literally any business models, right? So I don't think this is the end of it. I think there will be a use case for it, but I don't think it's there yet. It's kind of like blockchain. I mean, blockchain is fantastic technology, but I think we're trying to all figure out what's the precise use case for it, right? So this comes back to what I was alluding to with the startups, sort of lesson, which is building the best product doesn't really get you anywhere. You have to find the use case or the pain point that you're addressing. So I think that's kind of where we are, and I think we'll get there. We'll get there in the next few years, but it's going to take a bit of time. Some companies going to get hurt along the way, but that's the maturation process, right? We had the same process with a Web 2, with the dot-com bubble. This could be it for the crypto Web 3 bubble as well.
Yeah, I think you're extremely right there. And then in terms, because you obviously come from the investment banking world, what do you consider a good investment then in going into 2024? Like, are you still into? Do you do much investing currently, or is it mainly just focusing on your business at the moment?
Yeah, I mean, of course, I try to gain a bit more value with what I have. I think that's important. I mean, well, I mean, I say that, I think 2 years plus ago, when you tell people I'm just sitting on cash, that might not be the smartest idea. Now it's actually not a bad idea, and I think that's actually the interesting thing, because for people maybe in our generation, we've never really lived in a time when interest rate is actually high, right? We grew up mostly around a low interest rate environment. So this is all relatively new conceptually to us. So I think now, again, it goes back to individual risk appetite. If you want to be safe, put some money in cash, put in some deposits, you're going to do fine. I mean, of course, inflation is high depending on where you are, but you're going to get some decent returns. The equity markets, of course, are very volatile, and I think we're all sort of just trying to figure out when the Feds will stop hiking interest. But I think the economy is in a situation where I think it wants to grow. I think it wants to do better, to improve. But there are some underlying issues that's stopping it from doing that. So, I mean, the interest rate hike is obviously a big thing. The inflation is real. I mean, I was in LA just this summer. I mean, it was my first time back in the US since COVID, and my God, the inflation is actually real. It was mind-boggling to me how much a bottle of water costs actually.
Yeah.
So I feel that on the ground. But I guess to answer your question, I'm not even sure if I'm answering your question. Um, I think if you are willing to take a bit of risk, I think the equity market has some room to grow. But if you want to be conservative, park it in cash. There's nothing wrong with that. But I actually think the best way you can preserve capital or grow your capital um, is honestly just find a side hustle and turn your hobby into a business. And
Yeah.
it's actually kind of ironic I say that, because you're actually putting money into it. But I found that if you really chase your passion, chase your interest, you can turn that into a pretty decent side hustle. I'm sure obviously you've got a podcast going. I'm sure you probably have some other things going on. Actually, outside of what I do in Krip, one of my passions and hobbies is actually whiskey. So I
Okay.
actually collect and invest in whiskey. It's something that I enjoy. It's a fantastic social capital. I meet incredible people through that. And it's something that gives me a small return on the side. So I'm not sure if that's a good answer to that question, but
No, it's great. It's funny you mentioned whiskey. One of my old housemates wrote his. He was a financial economics student, and he actually wrote his thesis on the investing in whiskey or something along those lines. And so, and he was telling me about like the returns people get on whiskey. I could not believe it. Like I couldn't believe one, because I'm not a whiskey drinker, I just couldn't get it. Like if somebody was telling me about wines having that kind of investment return, I would understand. But whiskey, I just could not believe.
Yeah, yeah, it's crazy.
Yeah.
I mean, part of it there probably is a bit of a bubble, but uh, I mean, to me, whiskey is an interesting alternative investment, right? It's like art, vintage cars. There is an element of a trophy asset element to it, and you know, when you want to go show off to your friends that's like, I got a nice car, I got the only Mona Lisa in the world, or something like that, right? Like there's only 200 bottles, I got one of them.
Yeah.
So there is that nuance. But like any investments, there's ones that work and ones that don't. So you have to learn the market. You can't. There's no guarantee returns on anything. But I find it interesting because it's a fantastic social capital. It allows me to meet incredible people for work, for personal network. And you know, as I always say, the worst case is we all get smashed in a fantastic party. So can't go wrong either way.
I love that. I love that. I also love the term social capital. I haven't really heard that very much. Um,
Mm,
e- Explain that. So that means in terms of meeting people, networking. Is that what you mean? Social capital?
exactly. Exactly.
Okay.
It's actually pretty cool because I think, without trying to be stereotypical, I think whiskey tends to be older, sort of, older population sort of hobby. But by virtue of you knowing whiskey or just appreciating it, you know, these folks then find you pretty interesting as well, and then they'll sit with you. And you know, whiskey is something you can. It's not like vodka, right? You don't down it and then let's go have fun. You sip on it. Some folks might pull out a cigar, and it becomes a long evening, and then you just talk, and then you get to know each other. So it's incredible the amount of people I've met through just whiskey. And you know, some have been phenomenal friends on the personal level, some have been very interesting on the business side. It's just something that brings people together. And it's maybe, you know, other hobbies can do the same thing, but for
Yeah.
me, whiskey's turned out actually very, very well.
Well, maybe next time I'm in Hong Kong, you can treat me to a whiskey and a cigar, and
Oh,
we can
done. Done.
have a nice chat.
Done.
Cool, man. Well, look, we're running up to the hour mark. So where can people find more about you, your business? Where can people basically find out more about you and Krip?
Just find me on LinkedIn. I'm pretty regular poster. I'm actually trying to post a little bit more, share sort of my startup
Yeah,
journey and what we do. And you'll find my startup if you just go through my posts. I'm referred to it quite frequently.
cool. Well, look, thank you so much for your time. I appreciate it a lot, and like you've nailed some absolute little bombs of wisdom on people here, and I can't wait to actually clip this and send you some of the little chunks of gold that you've given people. Um, so this is a wrap. So anybody listening, thank you very much for listening, and David, thank you very much for joining me.
Thank you for having me. It's been a great pleasure.
Thank you, mate.